Imagine this. You just bought your dream home. The mortgage is signed, the keys are in your hand, and then your lender asks, do you want to protect your mortgage with insurance? Most Canadians say yes without thinking twice. But here's the problem. The mortgage insurance offered by your bank might not be protecting your family the way you think it is. In fact, it could be one of the most expensive, least flexible decisions you ever make. What most homeowners don't know is that personal life insurance could offer better protection, lower cost, and more control over your coverage. But the banks don't tell you that. Hi. If you're new here, my name is Darcy Bell, and I'm a certified financial planner professional with IG Wealth Management. I work with Canadians across the country to help them grow, protect, and pass on their wealth with confidence. And that includes making smart decisions about insurance and debt protection. Today, we're breaking down the truth about mortgage insurance versus life insurance in Canada and helping you understand which one actually protects your family best. If you're a homeowner or planning to become one, make sure to like, comment, and subscribe. Let's get into it. Part 1. What is mortgage insurance and what's the catch? Let's start with what most people think mortgage insurance does. You walk into the bank to finalize your mortgage and they offer you mortgage protection insurance. Sounds great, right? You just bought a house and now you can make sure that your family won't lose it if something happens to you. But here's the truth. Mortgage insurance from your bank is not the same as personal life insurance. And the differences matter a lot. Mortgage insurance is what's known as creditor protection. That means the bank is the beneficiary, not your family. If you pass away, the payout goes to the lender and it only pays off the remaining balance of your mortgage. But there are two big problems with that. Problem number 1 is your coverage declines, but your premium doesn't with mortgage insurance. Your coverage amount shrinks as your mortgage gets paid down, but your premiums stay the same, or in some cases go up. In other words, you're paying the same or more for less and less coverage over time. Compare that to personal life insurance, where your coverage is fixed or even increasing if you structure it that way, and your premiums are predictable. Problem number 2, you have no flexibility with mortgage insurance. You can't choose your beneficiary. The payout goes directly to the bank. You can't use funds for anything else, even if your family needs help with things like education, bills, or long-term care. And if you switch lenders or refinance, good luck. You may have to reapply for new coverage, and that could mean higher premiums or denial if your health has changed. With personal life insurance, your coverage goes with you. You're in control. You decide who receives the money, how much they get, what the money gets used for. It's your policy. You own it, not the bank. Part 2, how life insurance works and why it's often the better choice. Now that we've broken down how mortgage insurance works from the lender and where it falls short, let's look at the alternative, personal life insurance. This is the type of coverage you buy through a licensed advisor. And the key difference? It's built around protecting your family, not just your lender. Here's why that matters. 1, you own the policy, not the bank. With personal life insurance, you choose the amount of coverage, whether it's just enough to cover your mortgage or more to help with income replacement, future education, or other financial goals. You choose the beneficiary, so your spouse, children, or other loved ones receive the benefit, not a financial institution. You keep the coverage even if you move homes, refinance your mortgage, or switch lenders. This is your insurance, not the bank's. 2, you get guaranteed payouts and medical approval up front. With mortgage insurance, your health is often only reviewed after a claim is made. This is called post-claim underwriting, and it means you could pay premiums for years only for your claim to be denied later due to health issue that wasn't disclosed or misunderstood when you applied. With personal life insurance, underwriting is done up front. That means, once approved, your policy is contractually guaranteed. No surprises for your family down the line. Peace of mind that the money will be actually there when it's needed most. You get more flexibility, often for less money, contrary to what many people assume. Personal life insurance is often cheaper than bank-offered mortgage insurance, especially for healthy individuals in their 20s, 30s, and 40s. And the coverage is far more flexible. Want a 20-year policy that covers your mortgage and your children's education needs? Done. Want to add critical illness or disability protection? You can. Want to use your policy as part of an estate plan or business succession strategy? Absolutely. That level of customization just isn't possible with lender-based coverage. So if you're looking to protect your home and your family, personal life insurance offers more control, more flexibility, better long-term value, and fewer surprises when your loved ones need it most. Part 3, when mortgage insurance might make sense and what to watch out for. We've covered why personal life insurance is often the better choice. But let's be fair, mortgage insurance does have a time and place. There are a few scenarios where it might be worth considering, especially if it's the only option available at the time. 1. You're closing quickly and don't have time for underwriting. Buying a home often moves fast, and if you're a first-time buyer or juggling a lot during the process, you might not have time to go through the full application and medical underwriting for personal life insurance right away. In that case, temporary mortgage insurance through your lender can offer short-term protection. Just remember, it's best used as a stopgap, not a long-term solution. If you go this route, consider applying for personal coverage as soon as your home closes. 2. You have significant health issues or medical uncertainty. If you have a complex medical history or anticipate that you'll be declined for traditional life insurance, mortgage insurance may seem more accessible. Some bank policies offer limited or no medical questions up front, which might appear easier. But caution is key here. Because of post-claim underwriting, your coverage isn't truly guaranteed. And there have been many high-profile cases where claims were denied based on pre-existing conditions. So while it may feel like a lifeline, it's not always as secure as it appears. If you're unsure, working with a licensed advisor can help explore guaranteed issue or non-medical policies as alternatives. 3. You're looking for simplicity. Let's be honest, not everyone wants to shop around, do a medical, or navigate insurance policy options. If your only goal is to ensure the mortgage is paid off, and you're comfortable with the idea that your lender gets the benefit, not your family, then mortgage insurance might seem good enough. But before signing off, ask these questions. Is the payout guaranteed regardless of future health issues? Will the coverage amount ever decrease over time? What happens if I switch lenders or the payoff of the mortgage early? Mortgage insurance from your lender may offer convenience, but often at the cost of flexibility, control, and peace of mind. If protecting your family, not just your lender, is your top priority, it's worth exploring personal life insurance with the help of an advisor who can tailor it to your needs. Your home is likely one of the biggest financial commitments you'll ever make, and protecting it is essential. But how you protect it matters just as much as whether you do. Mortgage insurance may seem convenient, but for many Canadians, personal life insurance offers more flexibility, more control, and more peace of mind, especially when it comes to protecting your family, not just your bank. Still unsure which is right for you? Click the link in the description to book a free consultation with me. We'll walk through your options together and help you build the right protection strategy for your mortgage, your family, and your future.